Welcome to The Explainer. Today, we are diving deep, really deconstructing, one of India's biggest and most complex companies, Reliance Industries. For the longest time, if you asked someone what Reliance does, the answer was simple: oil and gas. But is that still the whole story today? Not even close. The answer to that question has completely changed. So let's get right into it and unpack how this absolute behemoth of a company has totally reinvented itself. All right, Section 1, the new Reliance Engine. We're going to start by looking at a pretty fundamental question. Where is the money actually coming from these days? And I think the answer is going to surprise a lot of you. Okay, just look at this chart. It tells you everything you need to know. For the first time ever, the consumer businesses, we're talking Jio and Retail here, are bringing in more than 50% of the earnings. Think about that. The old oil and chemicals business, the O2C segment, that's still a massive part of the puzzle, for sure, but it's no longer the main event. The entire engine of the company has shifted. And this table here, it just lays it all out so clearly. It's like you've got four completely different giants living under one corporate roof. You have Jio Platforms, which, let's be real, is way more than just a telecom company. It's the digital lifeline for over 500 million Indians. Then there's Reliance Retail, with stores in literally thousands of towns. You've still got the legacy cash cow, the oil to chemicals division. And then you have this huge, audacious bet on the future with new energy, which they're building from scratch. So here's the bottom line, the most crucial point of this whole first section. You simply can't think of Reliance as an oil company anymore. It's just not accurate. It's now what we call a sum of parts story. To really get a handle on its value, you have to look at each of these pieces, digital, retail, energy, and new energy, as their own separate massive businesses. Okay, so on to Section 2, a look under the hood. Now that we know what has changed, let's look at the how. How on earth did they fund this massive pivot, and what does it mean for the company's financial health right now? Now this chart, this one tells a huge story. We're looking at free cash flow here. Basically, the real cash the company has left after all the bills are paid and all the big investments are made. And whoa, look at FY23. That is a massive negative number, right? That's them pouring billions into building out their 5G network across the entire country. But here's the kicker. They've turned the corner. That heavy spending phase is done. It's like they've flipped a switch, and now, for the first time in a while, the cash is flowing in, not out. And you know what's really amazing? After spending all that money, you'd think they'd be drowning in debt, right? Well, nope. Their debt-to-equity ratio is just 0.41x. For a company that builds things on this kind of epic scale, that is an incredibly healthy number. It tells you they managed this gigantic transformation without getting themselves into a risky financial position. Okay, and this number? This is a great sign. It's a measure of what we call earnings quality. And what it's telling us is that for every 1 rupee of profit they report on paper, they're actually generating almost 2.5 rupees in actual real-world cash. That's a huge green flag. And look, the analysis we're drawing from really hammers this point home. When a company generates way more cash than the profit it reports, that's what you call a hallmark of genuine earnings. This isn't just some accounting trick, it's the real deal. All right, Section 3, the future. We've seen the new structure, we've checked under the hood and seen that the financials look solid. So the big question is, where does it go from here? Let's look at a few possible scenarios. So the analysis lays out 3 different paths forward. You've got your bear case, that's the worst case scenario, right? A global recession hits, things slow down, and the stock takes a hit. Then there's the base case, kind of the middle ground, where things just chug along steadily. And then you have the bull case. This is the super optimistic view, where everything goes right. The IPOs happen, growth accelerates, and the valuation could really take off. So what could actually make that bull case happen? Well, there are a few key things to watch, what we call triggers. The absolute biggest one? The IPO for Jio. That could unlock a tremendous amount of value. But there's more. We're also watching for their new energy business to actually start making money, for any tariff hikes in telecom, which they can do because they're the market leader, and for their new consumer goods to really take off. Oh, and of course, a good old-fashioned recovery in the original oil business wouldn't hurt either. Okay, Section 4. We've gone through a lot of detail here, so let's boil it all down. What is the one key takeaway you should remember from all of this? It's really this. When you buy this stock today, you're not just buying an oil and gas company, not anymore. You're essentially buying a piece of the entire Indian growth story. You're getting India's digital future with Jio, the Indian consumer with Reliance Retail, India's energy security, and its energy transition to renewables. It's all packaged into this one single company. And that, of course, leads us to the million-dollar question for any investor, right? Has the market fully caught up to this new reality? Is the current stock price truly factoring in this massive transformation and the incredible potential locked inside those digital and new energy ventures? That's the big question you have to ask yourself. All right, before we wrap up, a quick but important disclaimer. The analysis shared in this explainer is for educational and informational purposes only. I am not a SEBI-registered research analyst or investment advisor. You know, investing in the stock market involves significant risks, so please keep in mind, the data and charts we've shown are all based on public information and my personal research notes. This is absolutely not a buy or sell recommendation. You should always conduct your own due diligence or consult with a SEBI-registered professional before making any financial decisions.
If you found this deep dive helpful and want to stay updated with more stress-free investing analysis, please do hit the subscribe button and press that bell icon so you never miss an update.
And hey, I really want to hear from you. Which Indian-listed company should I break down next? Drop the stock name in the comments below, and who knows, it might just be the star of our next explainer. Thank you so much for watching, and remember, keep your investing stress-free.